VAT. And I told you in some of discussions that we had in the past that the introduction of the VAT in the Gambia also has to do with our, commitments at the level of the sub-regional body that is ECOWAS. ECOWAS has a VAT protocol which had enjoined all member states of the sub-regional body to introduce VAT. So as I am speaking, most of the countries have already complied, except the Gambia, Liberia, and Guinea-Bissau. And Gambia and Liberia have already embarked on the journey to introduce the VAT. And to do that, definitely ECOWAS also, realized that, they needed to provide support, to governments or to countries that are yet to, introduce the VAT. And for that, there was, a ministerial decision that was taken to that effect, if my memory serves me right, sometime in 2009. And that ministerial decision basically, was a commitment on the part of ECOWAS to provide technical and financial support to the member states that are yet to introduce VAT. And shortly after the ministerial decision was issued, ECOWAS fielded a mission to the Gambia in 2009, and that mission culminated into the signing of a memorandum of understanding with the government of the Gambia, being represented by, of course, Gambia Revenue Authority. And that memorandum of understanding clearly spelled out the commitment of ECOWAS to assist Gambia government in the introduction of VAT by providing experts, and also by providing financial resources. So we have had some support, from ECOWAS.
When one looks at the abbreviation VAT, which spells out value added tax, what value is added on the product itself and the service? I mean, where do we get this? What is value added? What value is added to either the service or the product?
Just to give you a direct answer, if you look at, the difference between, your purchases, like you are in business, Malik, you are selling calculators. You bought them. There was a purchase price for the calculators that you bought. And now you are selling them. When you are selling them, they are also fetching another price. So the difference between the price they are fetching at the time you are selling them and the price that you paid when you are buying them, there is a difference. That difference is value addition. So that's the simplest way of explaining it.
Come back again.
Malik, you are selling calculators.
Very well.
Okay? You have your shop, somewhere, on Caraba Avenue. So you bought the, let's say you imported, let's assume that you are importing these calculators into the country. You imported them, you pay the duty and all the necessary taxes. And if you have to pay maybe transportation also to get them to Caraba Avenue, whatever cost you had incurred, to bring these, products, into your shop on Caraba Avenue. So when you bought them, there was a price that you paid. So when you are selling them, of course you have to add a margin there. You cannot sell them at the same price you bought them for. Then that means you should get out of business.
Taking into consideration the transportation and all
that's
the
what I'm saying. So now that all those things are there, all those things are part of the value addition that is taking place. Now that you have sold them, they have fetched a price. So that price is also reflecting other expectations you have in terms of meeting your cost of doing business and also the profit margin that you have in mind. So when you sell now, the difference between your sales price and the price that you paid when you are buying is your value addition. Of course, it reflects value addition in the sense that the price would not have changed from the time you had purchased these things if there was no value addition.
Now, is VAT transferable? Supposing taking into consideration all the processes have gone to and arriving at a price, let's say my calculator should cost $480, and I sell this calculator at $490, making my $10 a profit. If I sell it to Mr. Mahmoud Ture, a retailer at the Serekunda market, will he charge VAT?
Well, I like this question for the simple reason that, it's important for the general public to understand that VAT is not meant for every business that is operating in the country. You have to be registered. That gives you, once you are registered, that gives you the legal mandate to be able to charge VAT. So it doesn't mean that everybody that runs a stall, every corner shop in this country should charge VAT. VAT, that is why we have a threshold of 1 million for mandatory registration. If your sales of goods and services that are taxable reaches 1 million, you are required to register.
Now you're telling me who charges VAT?
Exactly. So it's all linked to that, because you cannot come to the issue of, you know, how to call it, the charging of VAT without linking it to registration. One has to be registered. Once you are registered, then you begin charging it.
All right.
And
for one to register, your business should reach a threshold of $1 million.
1 million. But there is also another provision.
That is by force, mandatory. You must do it, whether you like it or not. Very well.
So, but we had also made provision for those who want to come in because of the benefits that they are seen in the tax. They can come in and register voluntarily if they have 500,000 and above, but under 1 million. 1 million above is compulsory, but 500 to somewhere under 1 million, you would be allowed to register voluntarily, subject to certain conditions that we would, you know, need to do some checks to ensure that you will be able to comply with all the obligations.
So there are two categories. The mandatory, which you need to reach a threshold of 1 million and above, and the one which is voluntary,
500,000,
meaning 500,000
exactly,
and above if you feel like.
Exactly.
And the others who do not reach this category don't need to register.
We don't want people that are selling get-a-surf or people that are selling bananas on the streets. We don't want them to,
like the fana selling the fogajai on the street there.
We don't want, they cannot charge VAT. So we want to make that very, very clear from the outset, that definitely they have nothing to do as far as the charging of VAT and the filing of a return is concerned. Those responsibilities are entirely taken off their heads.
All right, that brings me back to the question I was asking. Is VAT transferable?
Okay, transferability, it depends on, you know, how you approach the question, because all indirect taxes, VAT, like any other, you know, indirect, VAT is an indirect tax. And the reason why we call them indirect tax is because, you know, you can sift the burden. The burden is siftable. But for the income tax that you pay from your salaries, you know, the income that you earn, I cannot pay your tax for that income. That is just, you know, specific to you as Malik. So that's the difference between what is direct and what is indirect. It is transferable, but the good thing about the design aspect of the VAT is that what is supposed to be transferred is what comes under the, you know, input tax credit mechanism. Because what they were supposed to transfer is the tax they had paid when they imported, the VAT they paid when they imported, and the VAT they are paying when they are buying locally. That's what they should have shifted to you. But now that is coming in the form of a refund that is through the input tax credit mechanism. When they file their return, they indicate all these VAT they had paid, and they would get a refund. That's how it works.
Sales tax is spontaneous, meaning that you pay sales tax on the spot when you make the purchase, right? Unlike VAT, when is VAT payable?
Well, VAT, let me make one important clarification here. VAT and sales tax, both of them are monthly. They are payable monthly. And then the deadline for the payment is the 15th day of the month following the end of the month that we are talking about. For instance, we are now in July. So sales tax for July is, you know, is the deadline for the payment of the sales tax for July is 15th of August. So at the end of every month, you are given 15 extra days to be able to effect your payment. So if you don't effect your payment by the deadline, so that's the time penalties and interest would have to, you know, attract. So that is why it is important that taxpayers understand when the deadlines for the payments, you know, are, so that they are able to pay on time to avoid paying the tax and paying penalty and interest. Like I said, both of them are paid monthly. And for the VAT also, it's the same thing. It's going to be a monthly tax. At the end of every month, they are expected to file a return. And basically, how much you pay is an issue here. I've been talking about refund. When it comes to payment now, they would complete their return. On the return, they will show how much they collected from customers who bought their goods or their services. They would also indicate on the return how much VAT they had paid as business people. So now what they pay to Gambia Revenue Authority is the difference between what they collected from their customers and what they had paid themselves as VAT. If what they collected from customers is more than what they had paid, then they would pay to GRA. But if the reverse occurs, GRA is owing them money. And if GRA owes them money,